The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, the soy complex was the star of the show on the day, Thursday, with double-digit gains there. A decent day in products as well. Corn, March corn still struggling with $5 on the board again, though, but some green on the screen. A little pressure in the wheats and pressure in livestock. Let's talk about it. Joining us now for our weekly conversation, Brian Doherty, Senior Market Advisor at Total Farm Marketing. Brian, good to catch up with you again this week. Hope all is well. And you look across the board, a fairly quiet day outside of the soy complex. Like I mentioned, a pretty decent winter on Thursday.
Yeah, interesting day there too. And one comment I just wanted to make: you look at corn, and the rally's just right at $1 in March corn. So we went from basically 404 to a little bit over 504. And so if I take $1 divided by 4, that's 25, right? 25% increase. It's amazing how the drop in carryout went from 2 billion to 1.5. 25%. So there's a strong historical correlation, the inverse relationship of the move of or the trend of carryout and the trend of price. Not always matching up like this, of course, but this is interesting. But it looked like in corn we had some unwinding of bull spreads today. So front months did finish a slight bit higher. And have some resistance here at $5 on March and $5.15 in May and $5.20 in the July. But some good pickup, 3.5 cents in September and 3 in December. December now 4.79.5. So from our long-term conversations, starting to reach those levels where farmers really need to be thinking about what that could mean if there's big crops to be had. So we talk about balanced approach there, but beans, you're right. The star today there. They had a bit of a rough session yesterday, but not a horrible close, but bounced right back today. And I think it's weather related, talking about warmer, drier conditions in Argentina, in particular northern Argentina. So it didn't take the market long at all to find some quick support there.
Well, and you bring up South American weather and Argentina. I think about how important they are to, say, the soybean meal market, Brian, and soybeans, just in general. And you look at Brazil; they're trying to catch up. It sounds like they maybe have in some spots, but trying to harvest beans and get that safrita corn planted. It feels like that weather in South America, we kind of have to continue to really keep our eyes on it here over the next several weeks because it's underpinning these grain markets right now.
It is. And on the grander picture, big picture, everybody who looks at that, we're all looking at the same thing, right? But we just kind of put our different view of it. And I think my view of the Southern Hemisphere, in particular Brazil, is you've got large fields, large equipment. You can make up ground in a hurry, theoretically. Now, so has the weather been outstanding? No. Has it been a train wreck? No. It's been pesky, kind of on and off, good, bad, indifferent. And the markets have kind of, at these lower historical prices, they've factored in some weather premium here. And I think that's legit. And it's a concern that an end user would look at and go, well, beans are around $10.50, corn around $5. That's still a relatively low price relative to $6, $7, $8 corn. Gosh, what is this, 2025? We had $8 corn in 2008, 2012. What was the last time? 21, 22. So in perspective, things are still a good value to the end user. You've got record high beef prices, cattle prices recently. You've got a decent milk market. You've got hog prices punching in the new highs here earlier in the week, flipped over a little bit, but still you've got some margins that I think have some merit there, even at these prices.
The headline news risk, too, is obviously at play. I know there's been some chatter on Thursday that it's a more positive tone from the Trump administration about a potential trade deal with China. But earlier this week, we'd even heard that some of the relations between Trump and President Xi of China maybe were kind of hitting the back burner a little bit. So it seems like it's an ebb and flow issue there. Plus, too, I saw some news, Reuters reporting that the Ethanol, U.S. oil, and biofuel groups have banded together to urge the Trump administration to increase volumes on renewable fuels that must be blended into the nation's fuel mix in 2026 and beyond. So, the headline news piece of this seems like there's maybe some potential positive influences on Thursday's grain trade as well.
Well, absolutely. Look at in the complex. Meal was up buck and a half today ish in that area, but a good almost a good almost 96 points higher in the March. Bean oil 99 higher in May, 98 higher in the July. So some good strength in bean oil. So relative, what does that mean? 98 points, where it's a contract where each point is worth 600 or $6. So you're looking at 100 point $600 move. That's like a 12-cent move in beans. So it mirrored the bean meal, about $150 move. So the big move was more in the oil today. I think reflecting some of what you said and maybe some confidence that that big picture perspective that the alternative energies, that is the biofuels in particular, uh, that I think still has, from my readings, a place, and the administration I think is warm to that, to that avenue of energy production. Not so warm if you listen to Trump to windmills.
Yeah. No, very, very true. Very true. Brian, I should ask you about the wheat markets too. Kind of a down day there. And I did see one of your articles over the weekend. I know you write a lot of great articles, and you had one in Successful Farming's website looking at wheat. And the title is Wheat Bullish or Just on a Price Bounce? Well, I'll ask you now, a few days removed from that. Was it just a price bounce potentially here? How's this wheat market looking to you?
It's both. It was a nice, beautiful price bounce, some short cover. When you get a market that begins to move, you're going to have those who've been kind of long-term defensive or buy stops in it that get triggered. That's what we mean by short covering. It's contracts that are being tripped, buying, and the covering the shorts, that is exiting short positions, sometimes entering excuse me, sometimes entering new long positions. So
Mhm.
when you look at that big picture perspective, um, impressive run. Correction this week. I'm going to call it a correction. I still think that the bigger underlying factor of all this basically is that um, the big picture perspective is, let me just send, I'm sorry about that. Big picture perspective is that Russia's crop is not anywhere what it could be, and Russia will limit exportable wheat. And when you look at that big picture perspective, that's why I think globally wheat prices are of value to the end user. We've had a couple of down days here. This is a correction in a bigger correction moving upward.
You look at the dairy market as well. Let's go over there. And we've talked about some of the volatility that's been there for a while now. What are you watching as we're nearing the end of the month?
Yeah, so we're kind of stuck here in the sense that it's had a pretty rough go of it, Jesse. And when I say rough go of it, what's happened is the butter prices have continued to remain in a longer term downtrend. Cheeses remained variable. Our sources telling us that cheese supply is heavy, so you got your post holiday season, post Super Bowl season, and all of a sudden you got extra inventories or inventories that just don't warrant the market to see much of an advance there. So when you look at today, we had some recovery, but a pretty big down day yesterday. And the net change is still about 30. Let's call it 30 points in the front months, and you've got 18s and 19s in front of milk. You're not going to likely see a lot more than that at the present until we see some perceived change in the demand market. Now, what's interesting here, though, is in all my years of doing this, I've never seen sort of this sort of confluence of a lot of big variables that each have different effect. You know, what we're looking at here is dairy producers finding much success in dairy to beef, right? So keeping beef calves in the mix. So that makes for a limited supply of heifers, right? So in theory, if you have a limited supply of heifers, you're not growing the herd, you're just replacing the herd. Ultimately, that should lead to a bull run or a big push in milk prices. The problem is, I think you've got an economic environment that just cannot absorb $20 plus milk. And until we see inflation reduce, these are big variables. Until we see inflation kind of get tamed or under control, I think we're destined to see rallies and then drop-offs. It's not a bull market, it's not a bear market. It's both. If you're bull at the bottom, bear at the top of the range, but it's a range market. And that, unfortunately, I think is the kind of the destiny for milk prices in the foreseeable future. That's the way it's traded, and that's the way it looks like it's going to continue to trade.
Brian Doherty with Total Farm Marketing joining us here today. And you made me think about this. It's as you were talking dairy, it's not a bull market, it's not a bear market, there's volatility. Could we maybe apply that to some of the other proteins as well right now, cattle and hogs? I mean, 2 tough days of the hog market here in a row, cattle down as well Thursday ahead of an on feed report. Is it kind of the same concept or is it different?
I think it's different. I think the cattle inventory report really put an exclamation mark on the supply side, right? So it's the same as, I mean, it's the same concept that it's the same as, let's say, milk, because I don't think the market from a demand perspective can absorb $250 cattle. It seemed to have been able to support $200 plus, maybe up to 210, but look how it's come under pressure. It looks like this week and maybe $200 cattle, still high prices historically, but I don't think you can compare the tighter supply of beef cattle to the same as a tight supply of the dairy cattle. Uh, Dairy is kind of in an adequate zone. Anyway, I think big picture, I want to be a little bit more supportive the cattle complex in the sense that the downside probably has limitations. With milk, I still get a little concerned that you could have some drop-offs yet, and thus, purchasing puts, being hedged, good places to be in the dairy, in particular when prices rally.
Yeah, I look over at the cash cattle activity, finally getting some of that Thursday afternoon, kind of that 199 to 200 mark live, 315 dressed. We know that's a little lower here again this week. I mean, you look on the cash side of the equation, any notes there for cattle producers, anything you're seeing or hearing right now, Brian?
Yeah, I'm seeing where what we talked about this a couple of weeks ago, where it seemed as though, and I think it was true, that the Packers were sort of, I call it squealing. They were just in a tough bind. They were short on some inventories, had to pay up for them. I think they got them bought, and then they have the ability to sort of back away from this. So I think you've got that. I don't know. I mean, outside influences, we've kind of talked about, things that can affect demand. Mm, I don't think I've heard this, but I'm going to disagree. I don't think you can deport enough people fast enough to say, all of a sudden you got a bit of a demand hole for beef. So I just want to throw that out there because I've heard that, and I want to give my 2 cents of opinion. I think you're not looking at deporting 20 million people.
Mhm.
You're deporting the worst of the worst right now. Um, uh, so it's really, I think, demand the consumer demand overall. And what surprised me late fall and this winter was it seemed like, despite talk of 60% of the population living paycheck to paycheck, or 65% have less than $1,000 in reserve, that last third is able to absorb the beef market. And I think that any pullback in price keeps restaurants at a stable price. It keeps the supermarket maybe a little cheaper. So I think our autonomous demand, that means automatic demand, well, you can't have it in beef. It's pretty close to autonomous. You're going to get just a certain amount of demand that's going to be there regardless.
Brian, I'll open it up to final thoughts from you. Any other key markets you're watching this week, or anything you want to reiterate to folks here before we close it out?
I think the thing we want to just make sure that we're prepared for is volatility. Let me give you a quick example. It took, I believe I mentioned this, but it took 4 months for corn prices to rally 50 cents, and it took 5 weeks to rally the next 50 cents. So you're starting to see some acceleration there. Markets have a tendency to move in phases. So, I was just having a conversation with a farmer, and he said, I've been selling along the way. And he goes, I don't know, maybe I made a mistake. And I said, I said, there was nobody that I follow a lot of people. I read a lot. I put my own things on. Nobody 3 months ago that was talking about the board at $5. We're talking about this excess inventory and big supply. So nobody's out there forecasting this. And if they were kind of taking a wild stab at it. Now, there may have been some that said, hey, we've got a good world demand market. But it is what it is. So the market has moved up to here. The point I'm making is you could be at a crossroads here where the market could now make the next leg of acceleration, or it just runs out of gas. So I think it's just really important, again, to keep what I'm going to call that balanced approach. If you've been selling corn all along the way, and in particular lately, you've been doing the right things given the current supply and given the projected supply of corn. On the other hand, weather is still your dominant factor. So the big weather events are ahead of us yet with the Safrinha corn, the North American corn. So create that balance, sell that cash. If you want to retain ownership, have a good conversation with your advisor. How can I be in this if things take off to the top side? And how do I protect, even with what I've got left in the bin or new crop, how do I protect that on the downside? So what can I do? Think strategy more so than outlook.
Folks want to talk strategy with you. They're at Total Farm Marketing. I know a few ways to get in touch. How can they reach you, Brian?
Best way is a phone call, 800-334-9779. So I'll start with that. And then the second would be send an email, Brian with a Y at totalfarmmarketing.com. Happy to field any questions, concerns, comments, rotten tomatoes, whatever. We'll take them. But happy to have that conversation. And then we've got a website, totalfarmmarketing.com.
Brian Doherty, Senior Market Advisor, Total Farm Marketing. Always good to hear from you, sir. Have a great weekend. We'll talk to you next week.
Yes, sir. Thank you, Jesse. Always a pleasure.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@markettalkag and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.